So hello, welcome to the next video. Let's do the next example for the whole trading plan. Okay, so as you can see, the structure is the same, just like in the previous example. Price is moving in an extremely bearish trend, creating inefficient movements to the downside, breaking structures to the downside over and over again, respecting supply zones over and over again, breaking through demand zones over and over again. So the structure is still extremely bearish, as you can see. We have these two 4-hour demand zones marked out again, just like in the previous example. So I won't show you that again. So okay, let's map out our structure. As you can see, price is moving in a downtrend, creating a series of lower lows, lower highs, and price is respecting its supply zones over and over again. We had this last supply zone right here. Price reacted on this supply zone after the inefficient push to the downside and the demand tap. So price actually tapped this demand, reversed on this demand zone, and after the tap of this supply zone, it reversed again to the downside and did a break of structure with this movement, with this wick. Because as you may know, break of structure won't be a break of structure if it breaks with a wick. So this wick wasn't a break of structure, it wasn't a demand break, it could have been just a liquidity sweep or anything. So as you can see on the 4-hour chart, price tapped this demand zone first, rejected on it, tapped the supply zone, tapped the demand zone for the second time, rejected on that demand zone again. And after the rejection, this demand zone has been broken, as you can see, with an inefficient push. Let's see which 4-hour supply zone caused the break of this 4-hour demand zone. Because if a zone breaks, an opposite side zone will be automatically formed, as you may know. So as you can see, the inefficient push came into the market from this upside candle. And this upside candle has been not mitigated yet. So this is our right supply zone in this case, because inefficient push came into the market from this candle, break of structure here, liquidity sweep from this region, and also from this region. And it actually didn't tap into the next 4-hour demand zone. So we will have this right supply zone. I will just mark out this as a 4-hour supply zone, as you can see. And price actually tapped this zone and had a small rejection on it. Right now, we have to switch to the 15-minute chart and mark out all of the 15-minute zones. Okay, so as you can see, price rejected on this 4-hour supply zone here. And if you take a closer look inside of this 4-hour supply zone, there will be a really, really clear 15-minute supply zone, this one. And price actually tapped this zone also, not just the 4-hour one. As you can see, price exactly tapped this one and reversed on this zone. So this is a really, really strong confirmation for the shorts. So price tapped the 4-hour flip zone, because this 4-hour supply zone flipped the 4-hour demand zone. So this will be a really, really strong zone. If price rejects on this zone, we will know that we will look for a short opportunity and short confirmations. And inside of this 4-hour zone, price tapped the 15-minute supply zone. I will just mark it with this line. Okay. So as you can see, price just tapped this zone, and after the tap of this zone, it immediately reversed and had a really, really strong reversal and inefficient push to the downside. Okay, so right now we are on the 15-minute chart. We have to find all of the supply and demand zones on the 15-minute chart. Okay, so let's begin. As you can see, these areas, these zones are mitigated by the following price action. So this upside price action. So we will have to find for demand zones. Okay, as you can see, here's a demand zone that created huge inefficient push to the upside and changed character. I will just mark it as a demand zone and change the color to blue. So as you can see, here was a downtrend, inefficient push to the downside, downtrend, break of structure here, less break of structure, and this demand zone flipped this supply zone. As you can see, we have this supply zone that created the less low and created the less break of structure to the downside, and this demand zone reacted on this supply zone and flipped it with a huge inefficient push to the upside and liquidity sweep from this region, liquidity sweep from this region, change of character here, change of character here. So this is a really, really strong demand zone, as you can see, and price reacted on this demand zone immediately. And after the reaction, it pushed to the upside and tapped the 4-hour and the 15-minute supply zone that flipped the 4-hour demand zone. Okay, so after this demand zone, we will have another demand zone, which caused the inefficient push to the upside. And this will be the demand zone. As you can see, this is a really, really huge zone. So we will have to refine it on the 5-minute chart. And actually, we have another hidden demand zone. If I just zoom in, you will see that here's an inside bar. as you can see, inefficient push came into the market from these two candles, and this candle closed lower than the last high of the previous candle. So this means this is an inside bar, and we have a rule for this. Every inside bar is a supply or demand zone. So I will just mark this demand zone out. This will be our last demand zone, and price actually changed character here and broke to the last demand zone. So we will have a right supply zone. Actually, I can just mark out this zone as our supply zone, but I will just rather use the 5-minute refinement instead, because this is also a really huge zone. And this zone is also inside of the demand zone. So the next step is to refine all of these zones on the 5-minute chart. Okay, so let's refine all of the 15-minute zones on the 5-minute chart. And as you can see, price actually tapped this 15-minute zone already, so there's no point to refine that zone, because a huge recovery and huge reversal already happened on the 15-minute zone. So there will be no point to refine that 15-minute zone on the 5-minute chart, because as I said, reversal has been already happened. So, okay, let's start the refinements on the 5-minute chart. So this zone has been already mitigated, and this is the refinement of that zone, because the inefficient push came into the market from this candle, as you can see, and this was the last 15-minute supply zone that created the last 15-minute low here and the last break of structure. And this candle, as you can see, flipped that 15-minute supply zone. So this is a really strong zone. Okay, price mitigated this zone, and let's refine the next zone after this demand zone. And this is the next 15-minute demand zone after this zone, and the refinement will be really, really clear. As you can see, we have a crystal clear zone inside of this 15-minute zone, which is this one, because huge inefficient push came into the market from this candle. As you can see, inefficiency here, 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 and it broke structure to the upside. It slapped liquidity from this region, first, second, third tap. So it slapped liquidity, broke structure here to the upside. So did everything. This is a really clear zone again. This could be our later target point for the shorts. So if price comes back up to the supply zone, mitigates the supply zone, and creates a 1-minute change of character also, we will hop in a short trade and we will target this demand zone. There will be a huge room to enter in the trade, because the movement between this supply zone and this demand zone will be around 10 to 15 risk-reward ratio, which is huge, which is really, really great. We do not trade for ego, right? We trade for profit, we trade for money, and 10%, 15% on a single trade in minutes is extremely good, right? We can all agree in this one. Okay, so let's just continue. Refine this 5-minute zone. And as you can see, here's the inside bar. Here's the 15-minute inside bar. And actually price changed character on this zone, because as you can see, price actually broke this last high point. This was the last high point, and the break of structure came into the market from this wick or this candle, because price broke the structure to the upside with inefficient push. Here's an inefficiency, as you can see, and it body broke a bow and tapped this last supply zone, the refined 4-hour supply zone. And after a tap of this 15-minute supply zone, price reversed and changed character immediately and broke through supply zone. I mean the demand zone, as you can see. So if your demand zone breaks, a supply zone will be opportunistically formed, as you may know. So I marked out on the 15-minute this supply zone as our character changing supply zone, but we can refine this on the 5-minute also. So this is our refinement. As you can see, it's crystal clear again, because inefficient push came into the market here, change of character came into the market here, liquidity sweep came into the market here, swept liquidity, broke demand, broke structure, changed character, created inefficiency. So all of these movements are started from this supply zone, this 5-minute supply zone refinement, right? Okay, so here's the plan. We are waiting for the tap of this supply zone on the 1-minute chart. And after price tap this 5-minute supply zone, we will wait for a 1-minute change of character. So the 1-minute structure will look like this. Price tap this supply zone, creates a change of character, and then the freshly created 1-minute supply zone, we will enter in the trade and we will target this 15-minute demand zone. This is the master plan here. It's really clear and simple, right? Let me just walk through this again. So we had a 4-hour supply, 4-hour demand zone. Price broke through this 4-hour demand zone with a 4-hour supply zone. Inside of that 4-hour supply zone, we had a 15-minute supply zone that created huge inefficient push to the downside and break of structure and demand break. After this, price created an upside movement, levitated back up to this 15-minute and 4-hour supply zone. Price tapped both of the zones, swept liquidity from this region, changed character after the supply zone tap, the 15-minute supply zone tap, it changed character on the 15-minute and the 5-minute structure. After it created inefficient push to the downside, swept liquidity, created a fresh supply zone, and we can wait for a supply to be tapped and enter on a 1-minute chart with or 1-minute entry models. Either if it's a flip, either if it's a change of character, either if it's a continuation, we will enter in a trade. That's our master plan here. But one more noticeable thing, we can also miss this trade, just like the previous one. There's a chance that we'll miss this trade. This is also a textbook example, but there's a chance we will miss it. Okay, so let's see the 1-minute structure. Okay, so let's see the 1-minute structure. As you can see, this was the last 5-minute demand zone that created a new high on the 5-minute chart. And also this was the 15-minute inside bar that we just refined on the 5-minute chart. Okay, this was the 15-minute supply zone, and this is the 4-hour supply zone. As you can see, price actually tapped this 4-hour supply zone after a huge inefficient push. And this was the last demand zone that caused that push. So here's the last demand zone on the 1-minute chart that caused the less inefficient push that tapped us into the 4-hour supply zone. And instead of breaking below this demand zone and breaking below the strong low, because this is a strong low, it created a new high. So instead of breaking below the strong low and the demand zone, price created liquidity, as you can see. Here, liquidity on the downside, and here liquidity on the upside. So we have triple taps on the upside, triple bottoms on the downside. So this means this liquidity have to be swept on both sides, right? Okay, as you can see, price tapped the zone first, couldn't break above the last high point, couldn't break above it. It tried once, second and third time, but it couldn't break above. And the final push came into the market from this candle. Sorry. So the final push came into the market from this candle. As you can see, this was the 1-minute zone that created the last high and breakout structure and liquidity sweep. Okay, but right now we are in the 4-hour supply zone, and in a 4-hour supply zone we have to wait for a 15-minute or 5-minute change of character, as I told you, right? So 5-minute change of character happened from this supply zone, and this supply zone flipped the 5-minute demand zone. So we are waiting for this supply to be tapped and not the 1-minute supply zone that flipped the 1-minute demand zone, because we are inside of a 4-hour zone, right? This is a really important part, because this supply zone, this 5-minute supply zone, changed character on the 5-minute and changed character on this 5-minute demand zone. Because we are inside of a 4-hour supply zone, we have to aim for this supply zone, and we have to search for a reaction on this supply zone and change of character on the 1-minute structure on this supply zone. And we are not aiming for 1-minute zones right now. So these zones are irrelevant right now. We are aiming for this one. Okay. So I will just play price forward and wait for a reaction on this zone. So let's just play price forward. One more thing, as you can see, price actually broke through this demand zone also. So this is a really, really strong confirmation that the trend might be changing from bullish to bearish, right? Because price broke through several demand zones, either on the 1-minute, either on the 5-minute, and broke through many demand zones, swept loads of liquidity from here, from here, from here. So yeah, the trend might be changing from bullish to bearish. And the overall higher time frame trend, so the 4-hour trend, is still extremely bearish. Remember, we are aiming for short opportunities because the overall structure, the overall trend on the 4-hour chart is extremely bearish. Okay, so let's just play price forward. As you can see, price is ranging now. Swap this upside liquidity with this movement on the way to tap the zone, and the zone tap actually happened, as you can see. Let's wait for, okay, a huge reaction came into the market, as you can see. And sorry, I will just replay price here. As you can see, this was the last demand zone that tapped us into the 5-minute supply zone. So this demand zone was the last zone that created inefficient push, breakout structure, and liquidity sweep, and tapped us into higher time frame 5-minute zone, right? Let's just take a closer look. As you can see, here's liquidity. First, second, third tap. So here's a liquidity line. Here's inefficient push. Here's breakout structure. So this is a really valuable demand zone. Okay, as you can see, price reacts on this zone, right? Reacted on this zone. Give immediate reaction after the tap, after the mitigation. Right now, we will have a flip scenario because as you can see, price flipped this demand zone. Price broke through this demand zone, and this was a valuable demand zone, valuable 1 minute demand zone, because as I said, it created inefficient push breakout structure and swept liquidity and tapped us into a higher time frame zone. So basically it has 4 criteria. So this is a really valuable zone. Okay, as you can see, we have an extreme zone up here, extreme supply zone, but this extreme supply zone did literally nothing. It didn't change character, it didn't flip anything. So this is nothing. The right supply zone in this case will be this one, as you can see, because price created inefficient push from this candle, from this supply zone, and this candle was the one that caused the break of this demand zone and the flip. So this will be a 1 minute flip zone. We are aiming for this one. We are setting an order limit, a sell limit on this block. And as you can see, because this is a equilibrium entry point, because the wick is bigger than the whole body, than the 50% of the whole body, then we will use an equilibrium entry. I'm just setting a gap box up here, placing a sell limit on the 50% of this block. Sorry, the recording stopped again. I just realized that I just filmed the whole video and the end was missing. So let's just continue. Okay. So here's the last supply zone that created inefficient push to the downside. I broke through this demand zone, and I just did set an order limit on the 50% of this candle. So this is an equilibrium entry, right? Okay, I will use a 2 pip stop loss because, as I said, I normally use 1.5 or 2 pip stop loss, but 90% of the time I will use a 2 pip stop loss. So let's just keep it that way. I will aim for the next unmitigated 15-minute demand zone, which is this one down here. This is our last unmitigated 5-minute refined from the 15-minute demand zone. So this will be our target point. Okay, as you can see, the risk-reward ratio is almost 1:9. So this is a really, really good trade. As I said, we are trading for money. We are trading for percentage, and we are not trading for our ego, right? So 1:10, 1:9 is a really, really good and huge risk-reward ratio. We will gain almost 10% profit. Just imagine 10% profit in minutes. That's a really, really good risk-reward ratio. Okay, so let's just play price forward. As you can see, more inefficient push came into the market. A pullback started. Price created liquidity just for this zone and almost broke structure, but it didn't break structure because this is just a weak break, not a body break. So as you can see, we have a liquidity here. A really, really good liquidity line just for this zone, right? So this is one more confirmation that this zone will be the right zone and not the extreme one, because this zone has liquidity just below it. This zone has no liquidity, or maybe we can call this a liquidity, but as I said, this zone did literally nothing. It didn't change character, it didn't break supply, it didn't break demand, sorry, and didn't flip anything. This is the flip zone, and this zone now has liquidity just below it. So this is a one more confirmation. It has all the 3 criteria again. It changed character, flipped the zone, created inefficiency, created liquidity, swept liquidity. So this is a really valuable, huge opportunity zone. We are still keeping the order limit. Let's play price forward. As you can see, price swept the liquidity and tagged us into the trade. Right now we are in the trade, as you can see, and play price forward. After the mitigation of this zone, price immediately turned down, created a reversal, as you can see, and our trade is running in profit right now. Really, really good profit. And this low has been broken. This is a weak low because it couldn't create a new high. So it couldn't break above this last high point. So this means this is a weak low. And if price breaks through a weak low, we will set our stop loss to break even, as I said. So our stop loss is right now in break even. I will just mark it with a red line. Let me just change the color, please. Okay, so our stop loss is in break even. Right now, we have no risk on this trade. If it hits our break even point, there will be no profit and no loss. This is a really, really good trade. Okay, let's see what happens next. As you can see, price broke structure to the downside, but I won't set my stop loss here because this is a liquidity line. I will just keep my stop loss in break even. Let's see what happens next. As you can see, price is building up more liquidity. here. So I will just keep my stop loss in break even 2. Price broke structure to the downside here. As you can see, here's a break of structure to the downside. BOS short, play price forward. I will still keep my stop loss in break even because of this liquidity. Price broke structure to the downside and broke the last week low, but it has liquidity and I don't want to become liquidity. I will just keep my stop loss in break even. That's the most safest way in this scenario. Okay, play price forward. As you can see, huge break of structure came into the market again. And price coming up to pick up all of this liquidity. As you can see, I will just keep my stop loss in break even again. Price is coming up to pick up the liquidity. It didn't pick up the liquidity. Let's see what happens next. Creating more liquidity. It didn't pick up yet. It broke structure, almost broke structure between innovation and push. As you can see, this is not a break of structure because this was just a weak break. So weak breaks aren't break of structures. So I will just keep my stop loss in break even. Still, let's see what happens next. So break of structure happened now. I will just move my stop loss to this point, maybe just above the liquidity. So I will just lock in maybe 1.5% or 1%. So I will just keep my stop loss just above the liquidity. In case the liquidity sweep happens, the stop loss will keep me in. But this huge innovation push here and here is just an extra confirmation that market won't come back up to pick up the liquidity, and it's just heading down to our target point. So yeah, the first scenario, you can use your stop loss just the way I use, above the liquidity. The second one is just used above this last high point that created a break of structure to the downside with this movement, with this inefficient movement. So both are good because this has a higher chance to keep you in a trade. This will lock you more profit in case the liquidity sweep or the reversal happens. So let's see what happens next. And our TP did hit. So as you can see, we just booked almost 10% in maybe 15 or 20 minutes. So this was just a 20-minute trade. Actually, from 33. Okay, not a 20-minute trade, 40-minute trade. But in 40 minutes, we booked 10%, almost 10%. This is huge. In 40 minutes, you completed a whole FTMO or MyForex Twin challenge, right? This is a huge trade. So yeah, okay. This was the second scenario. This was the second example. Let's see another one. See you in the next one, guys.